Hello, everyone. Welcome to what I'll call the end game in our series on stock market trading and investments. So we've had a very wonderful time looking at a lot of issues, a lot of important metrics, what we call fundamentals. Okay, we've looked at quite a couple. Peradventure, you're yet to see that series. There'll be a link in the page where you can just click the videos and watch, or you can go directly to the page and see the videos. So it's a 5 to 6 part series. In 1 hour, we should be done viewing the entire content thereabout. So today we're basically putting everything together. So we have looked at leveraging ratios, debt to equity ratio. We have looked at price to earnings ratio. We have looked at earnings per share. We have looked at return on assets. We have looked at return on equity. We have looked at capital adequacy ratio, and on and on. We've talked about macro and micro aspects of determining when to play and when to withdraw or when to just stay. Okay, to invest in any stock, there are two ways. But when we use the word investment, we're usually talking long term. If you're doing it short term, then you're more or less a trader. So when you're a short term player in the stock market, the term usually associated with such people is the word traders. Okay, and that's why if you watch the stock market report on most major networks, you hear terms like today's trading, right? So meaning those that buy and sell, they do active trading. Okay, so that's an important aspect as well, because the whole essence of any kind of business or financial adventure is to make money at the end of the day. And one of the things we learned in the course of this series is that you don't take any one fundamental in isolation. You aggregate your findings and then make a decision after you have aggregated those fundamentals individually. You look at them, and then you aggregate their separate scores, and then usually most of them should come to a point of convergence for you. This is a good buy. Now there are situations where one or two fundamentals don't look very nice. Okay, it doesn't mean that the stock is bad. It just means that there are certain areas the company might need to improve a little bit on, and it could be that the company. Let me give you an example of what I'm saying. A particular company is into oil palm business. I'll not mention the specific. I was looking at the balance sheet for last year or last 2 years, and they made a major investment in Ghana. Okay. Now, if you look at the balance sheet, it shot up their total liabilities to a certain figure. Now, if you do any metric that involves liabilities, that acquisition would impact on that metric. But you see, we also saw that the acquisition of that asset also scaled or increased the value of their total assets. So one way or the other, the liabilities rose, but the total assets also grew in value. But more importantly was the fact that that particular plantation had, massive plantations of the oil palm kernels. Of course, that's where they make the money from. So what it simply meant is that within a short while, they'll start harvesting. Then money will flow, and the profits will flow. As I speak to you, that company, the share price of that company grew by 50 or 60%. This is the figure. As a result of that decision. Okay, so the point I'm making is you need to learn to look at all of these metrics together. You need to learn to look at them together. And that's why I've been talking about watching the entire content. You don't just pick ROE, and stick with it and run with it. No, you look at all the metrics. Okay? Then looking at the metrics again, you also need to look at the micro factors, the internal factors within the company. I talked about the management team. Who are the people running this business? If you see certain class of people on the board of a company, it makes you go to sleep as far as um, efficiency and operational prowess is concerned. And if a company is operationally efficient, that company will make money. So if you want to see a company that is doing well or a company that will do well, look at those managing it. It's usually a reflection of how well that company will either do or how badly it will do. Let me give you an example. There's a bank in this country went under. I'll not mention names. I'm not here to cast stones on anyone. When a particular person was appointed as the CEO of the bank, or the company rather, um, certain directors on the board of that company frowned at the appointment because they expressed preservation at the competence of that particular individual to run the affairs of that business. In fact, the story is that many of them resigned from the board, and the rest, as I say, is history. Business went under. However we want to look at it. So the management team, the people running the business, the quality of the staffers, then the products, the industry where that particular company whose stock you want to buy, industry where they are playing, what's their market share in that company? What are they doing that their competitors are not doing? Do they have a competitive edge over their peers in the industry? These are micro factors to consider as well in making your stock selection. I'll wrap up this summary of our stock investment series by drawing a few lessons from the sage himself, the sage of Omaha, Warren Buffett. One of Warren Buffett's rules in investment is to always check whether a particular stock you want to buy is undervalued or overpriced. And how do you determine that? Is by checking for the intrinsic value. Okay, the intrinsic value. That's where the metrics of fundamentals also come in, because one of the ways to measure intrinsic value is through the cash flow. Okay, there's what is called the discounted cash flow method, attributed to Warren Buffett himself. Different people have different opinions about that. That's not bone of contention here. The important thing is that you want to check the intrinsic value. Intrinsic value tells you whether a stock is overpriced, whether it's underpriced. And if you check the intrinsic value of this stock, of course, the intrinsic value are estimates, okay? They are hypothetical, but they have a strong measure of reliability because they are based on factual information. All right. So if you check the intrinsic value, let's say Apple. Let me use an American stock. Maybe the intrinsic value of Apple is $80, but Apple is trading the New York Stock Exchange for $75 or $70. The intrinsic value is showing that Apple should be valued at $80. What it means is that the market has not recognized the true value of Apple, and it's a good buy at that point. Okay, so if it's selling for $70, when the intrinsic value is showing that it should be selling for $80, it means it's a good buy. So you're getting it at a bargain price. So Warren Buffett taught us that we buy shares, buy stocks at a fair price or at a bargain price. He is not an advocate of buying stocks that are overpriced, stocks that are too expensive, except they deliver value. And value can be delivered in two major ways, in terms of dividends, in terms of growth. Okay? Of course, a lot of people say that Nigerian stocks have not reached their ceiling, they're not capped, they've not plateaued, they have a very high growth prospect, and I agree with that, absolutely. Nigerian stocks can give you 100% returns in a very short time. Some of us bought Zenith Bank last year. Some people bought GT last year. Today they are smiling because investments have doubled in value. Sometimes it has grown by 80%, 70%. Very good return. To think about the fact that you did not have to lose sleep over it, you just paid in that money to the bank or to a stockbroker, and then they got the shares for you. The rest is history. And then you're getting your dividends. Sometimes you get interim dividends. I heard that one of the big banks, one of the big five, paid interim dividends a few weeks ago. And I'm sure they are going to pay final dividends. They are financial year ending. So the stock market is the place to be. Another thing I would say that we learned from Warren Buffett is check for the company's moat. That's what he calls the moat. The moat is what we call the comparative advantage. That product, that service, that value that the company has that no other company can match or rival. I'll give you an example. Coca-Cola. Coca-Cola has a moat. That's their Coke, is their moat. We have different variants of Coke or cola drinks. None compares to the value that Coca-Cola gives to those who use it or those who consume it. So that's their moat. That's why Warren Buffett is still heavily, Berkshire Hathaway still has the largest shareholding stake in Coca-Cola, the brand, company, Berkshire Hathaway. So on that note, I want to commend you, and for those of you that have seen all the series, and for those of you who are here to see it, I encourage you to go back, watch all those videos, take action, right? There are two ways to invest in the stock market. Somebody might ask, how do I begin the process? There are two major ways. The first way is to get a stockbroker, a physical stockbroker. The second way is to get an online stockbroker. Some people say, well, how do I get online stockbrokers? Very simple. There are many online apps that stock brokerage firms have set up, very secure, where you can buy the shares. Of course, they're going to collect a little service charge for the service. Okay, most of them collect it as a percentage of whatever value, whatever amount investing. Some of them say 1%, some say 2%. And stock brokerage outfits have their varying charges that they give. Okay, so don't let that piss you off. Don't let that turn you back. They have to make money too because they're rendering a service. So there are lots of online apps you can use. This is not a paid advert, paid episode, so I'm not going to mention any specific news. But in case you want guidance, you know what to do. Come to the comment section or do us an email. It's in the description below. We'll be glad to guide you. And by venture you're not yet subscribed to this channel, please hit the subscription button. We have a target to hit over 1,000 subscribers before the end of this year. We know that with your help, with your support, we can achieve that. Please share this video with your friends. I know we've added value, we've been adding value to you. That's why you're watching this video. We want you to help us, we want you to support this channel simply by spreading the word about the good news that we bring to people, the free, wonderful information we bring to your doorsteps at no charge, at no cost. Okay, we believe very strongly we're going to do that target and beyond by the grace of God.